Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to The Week That Was, the weekly podcast that sums up market movement and events from the past week and their implications on asset markets. I'm Michelle Castellino, the host for this week's podcast. Since the 1st of April, Nifty and Sensex have risen by about 1.3% on hopes of potential de-escalation in the US-Iran conflict. Broader markets also saw an uptick, with Nifty mid-cap higher by 1.3% and the small-cap index up by 0.9%. On the sectoral front, IT gained 3.3%, driven by value buying ahead of the Q4 earnings season and supportive currency movements. Rate-sensitive sectors, including realty and banks, also saw buying ahead of RBI's April MPC meeting. Pharma, however, slipped 0.8% after reports surfaced of US imposing a steep tariff of up to 100% on patented drugs manufactured outside the US. Brent crude continued to surge, rising 7.3%, while gold extended its decline and was down about 1.8%. Bond yields inched higher, with the 10-year G-Sec closing at 7.05%. The rupee strengthened against the dollar, closing at 93.06 after the RBI imposed curbs on banks and corporate treasuries against speculative trading in the rupee. The current 15% pullback that we witnessed in March has been larger in both duration and magnitude compared to average pullbacks between 2005 to 2025. Foreign investors selling in March was also around $12 billion, which marks the largest monthly outflow ever. Risk sentiment also shows extreme bearishness towards risk assets, suggesting equities may be poised for a possible bounce back from oversold conditions. The key event to watch out for this week is the RBI MPC meeting, which will provide important guidance for the markets. Consensus expectations are that RBI will hold the benchmark repo rate at 5.25% in its April 2026 meeting, maintaining a neutral stance to manage inflation amid high global oil prices and West Asia tensions. The focus is likely to be on maintaining stable liquidity to support growth and securing rupee stability. For FY27 rate cut expectations, if we look at the 1-year OIS curve, it reflects that the markets are pricing in a rate hike within the next 12 months amid the global uncertainty. Bloomberg consensus estimates also indicate expectations of a hike in the second half of FY27 by a few brokers. Given that the US-Israel war has now entered its 6th week, our strategy continues to emphasize diversification, avoiding concentration, and building hedges. A diversified approach remains the best way to manage the risks and reduce exposure to shocks and create effective buffers in the portfolio. That's all for this week. Thank you for listening to our podcast. If you found this useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.